Hey, good day. On today's On the Radar Rapid Fire Review, I'm covering 3 stocks that could potentially put some money in your pockets before Christmas of this year. So that's one of the things. Next, what the heck happened to the follow-through day from yesterday? IBD says, hey, we are back in a uptrend. But what the heck happened? The markets this morning, rather than doing a gap and go, it did a gap and crap. And so we are basically almost down at where we started yesterday at on some of the indexes. So let's kind of take a look at and see what the heck's going on. Hi, I'm Dennis Wilburn, the Active Trend Trader. Thanks for joining us. Let's jump into the session. IBD basically is indicating that, wow, that's a pretty nasty looking bear. Now recognize that all media will try to, They will try to manipulate our bias by getting us emotional about it. So if I can get you emotional about it while we're going into a bear market, it will basically cause you to operate in a certain way. So be careful with your biases. What we have to do is remember to do, one thing and do it very, very well. What is that one thing? Trade the chart that's in front of you. So what are the index charts telling us? That's a great question. Get set up for coming back on a little bit. There we go. So what are the indexes telling us? Well, as you can see here, the high for today is where the S&P opened at. So it was a gap. Now, the last time we had a gap like that, not the last time, but we had a gap, and this is a gap and go. Gapped up, proceeded to move up. This is considered, I consider it a gap and crap. We basically gapped up. Then we went into a process of selling off through the day. What happened yesterday? In reality, the Fed signaled that they were going to start tightening a lot faster than they originally anticipated. Some people looked at that as being a good deal. Some people looked at it as being a not so good deal. From taking the stance of it's a good deal, well, it let the markets know what to expect. And so they have an idea that right now the Fed has penciled in 3 tightenings in 2022. However, inflation is running really, really rampant. Never in my lifetime, and I've been around for quite a while, have I seen a economy turn the way ours has done since January this past year. Now, I'm not going to lay any blame anywhere whatsoever. You can come to your own conclusions on that. But it seems like we went from being a, kind of a pro-economy type situation to a pro-government control kind of situation. And history is filled with examples how the big government type of scenarios do not work out well for the common folk like us, just trying to make a living, trading stocks. And so we'll see what transpires from there. So as we move towards the end of the day, we are bouncing off the 20-day moving average. That's positive. We break that 20-day moving average. I would anticipate a move all the way back down, test at the 460 level, and continue to drop from there. So as you can see, the momentum has kind of gone flatlined. We bounced up nicely on momentum, however, have not pushed on higher. One of the things that we have here and to be looking out for is we have definitely some negative divergence from these past highs. Matter of fact, the divergence started here, but then we also have some divergence going on here from these past highs. This is making a new high here. The momentum indicator is not. Same thing going on the market forecast. So what are we to do? What are we to take away from that? Let's take away that oftentimes that negative divergence can lead to basically a prerequisite or basically what it tells us is it tells us that not all of the stocks in that particular index are behind this move. And that's especially true on the S&P, which is a weighted index, and the NASDAQ, which is a non-weighted index. So am I buying the S&P right now? No. Even though yesterday was a follow-through day, this reversals like this is often looked at as being not good for the market. The NASDAQ, worse than the S&P. This is a very, as you see here, we basically ran up yesterday. That was a follow-through day. And that was a follow-through day from the rally attempt that took place over here. We got back up into past resistance, and then what? Another gap. And this is a gap and crap for sure. Dropping all the way back down. May close below the 50. If we close below the 50, I would look to trade the Qs to the downside on a bounce back up towards the 820. So somewhere about the 390 level, I would look for a potential trade down to the downside. With the expectation we're going to take out these lows and continue on to fall. So that's what I've got going on there. As you see, the market, the TSI has in fact reversed at the zero line. And oftentimes when that happens, it continues to drop on back down to the negative 42 level. Same thing with the market forecast, has rolled back over and is heading down. Weekly, and this is one of the things you always want to double check on. The weekly started to turn from last week, and now it is rejecting that down to the downside. So that's what we got going on for the Qs. Am I buyer in the Qs? No. I think the Qs are setting up for a downside break. And so where would I look at buying the Qs is another great question. The NASDAQ is, we do know that we have a support level. There was demand down here between the, let's say, the 379 and the 387 level. But that's, like $8 wide. We get into the middle of that, you may look for a potential reversal. But if you don't get the reversal, look for it to fall down. If I test up first, in other words, if I test up closer to the 8 and the 20 rebound up into that area there, that would give me that's what I'd be looking at to take a downside bearish trade. IWM. IWM actually was holding up fairly well a little bit earlier today. At the same time, though, what's going on? We basically came down and hit resistance, or correction, support yesterday. Nice reversal back up yesterday. Gapped above the night. There's the bell. Well, looks like we are going to be changing much of what the indexer's doing. As we say, they're closing in at least the IWM and the NASDAQ are closing where? In the lower third of their range today. So we basically, total bearish type candlestick today. Now, the question is this a bearish engulfing candlestick? No, it is a bearish candlestick that is engulfing yesterday's, but a bearish engulfing always happens at the end of an uptrend. And so if you're using the candlesticks, you need to know the terminology there. I studied under Steve Bigelow and learned the nuances of how to interpret the candlesticks. If you think that would be a good training session to provide folks, we'll leave a comment down in the comment section to say, yeah, Dennis, I think we'd like to hear about, tell us about the 5 or 6 best candlestick patterns for showing the, best that show the reversals. And I'll put together a training session for you. So IWMs continue to push down. Now we do know it has strong resistance support down here in between the 211 to 210 level. We've seen it, and it's again and again and again, going all the way back to January of this year. Will it hold this time? This is a little bit different. If we break out the bottom of that, where are we going? Well, look for a pullback down significantly. Let's really quickly just throw a Fibonacci on this to give us an idea of where it might go. And to do that, I need to go from low to high in this case, from down here some, down. Hopefully this draws it. Yeah, down. So low, high, 100% retracement. In other words, if I break out down here and it follows a symmetric move, it's going to put me down to about 177. Isn't it interesting, though? Look to your left. That's just about a breakout area. There's a zone right here where demand may be, that's where demand may say, hey, pick me up right there. How far, it's always good to know, if I did make that drop, how far of a drop would it be? Well, grab here. That would be a run of about 16%. 16%. Currently, let's just basically take from the high here down to this past low. That is 13%. So the Russell remains in correction. So that's what we got going on with the Russell. Now, you ready for these stocks that we're going to be looking at? We're looking for stocks that are going to be holding up better than the index and the markets themselves. So my first stock that I kind of like, I have been trading this, full disclosure, I have been trading this throughout the year, and it's done very well for us. But we had a really good signal on this today. Now, it may be crapping out here, but we will watch it. What makes this a good signal to me? One, the moving averages have not crossed up over yet. We still have what would be called a bullish stack, in that the 100 is above the 200, above the 50 is above the 100, 34, 20, and 8. They are still separated. The longer term moving averages are pointed up. We're in a strong uptrend. I anticipate this did a lot like the markets did, but didn't sell off quite as much. So if I retake if I pull back above the 20-day moving average, about let's say the 109.58 level, I would look for a potential to get back and get into a trade on this. Now, I am in a trade where myself and our members got in down here, and so we still hold some of that position. I'm just trying to fill it out and refuel with an additional position, anticipating that ATKR is going to continue to move up. Next, one that will be very near and dear to you. Well, no, I want to hold that one for the last. DHHorton. Again, nice pattern pulling back into a trend line. Now, I'm not ready to buy it yet, but I'm watching it for where my TSI is going to turn around, because right now it's pointing down, so I'm not going to do anything with this. I anticipate it bottoming. Now, it may bottom at the 0 line or the negative 42 line at about the same time that price actions hit that uptrend line. Same thing on the market forecast. Yes, it is pointing down. However, I'm still above the 80 line, which is considered strong. It is holding up very nicely. You can consider this a bull flag. And so as we're dropping down across here, break back above that, back above the either the 8 or a bounce off the 20. That zone right there would be a great entry point with a really tight stop below that. Like 10 to 50 cents below the next swing low. So DHHorton, I like it. Well, what's the next one? You're going to absolutely just going to go, you got to be kidding me. Actually, this stock has been really turning around lately, and I really, really like it. We had this stock on our list for our AutoPilot trading system that I put out for our members every week. And we actually triggered into a position on this today, down here about $171.30, somewhere like that. And right now we're up nicely. Now, I have to recognize that this may do a pullback all the way back into here. However, how far away is that? When I was looking at it, it's less than 5%, guys. It's 2.5% back to the trend line. And so if I drop below that trend line, I'm out of there. And therefore, I'm looking at a potential risk on this of less than 5%. So that's what I've got going with Apple. Surprise, surprise. Now, Apple may continue to fall on down, but we took it, like I said, I took it off and I pulled back to this past breakout area about there. So it did rebound. Looks good. hey, if you have any questions, please, hey, dialogue with me. Get into the comment section. Tell me what you're doing with your trades. Tell me what you're doing with the stocks that you're watching. What kind of videos would you like to see the active trend trader put together? I would really love to hear that. There I am. I would really love to hear that. I know we are getting close to moving into the last 2 weeks of the month. Christmas is, of course, what is it? It is next week, next Saturday. And we'll be enjoying the Christmas holidays up with some of our kids up in Boise, Idaho. And so I will be putting out content, but it will be a little bit less than what I would normally put out. So again, let me know if you like this. Let's dialogue. Let's chat. Again, if you would, recommend and suggest the Active Trend Trader and On the Radar to your friends who are traders. So aloha, God bless everybody, and we'll talk to you later in the week.